us on YouTube for free? Why are you listening to us on free when you're only getting a fraction of the information that we're providing you? When you could have all of us, Cowboy and I, full frontal.
Frontal.
I mean, Cowboy and I are working on low sleep, so bear with us. You can have us fully uncensored, unbridled, full frontal, not nudity, but
assault.
Full frontal trading brutality. There you go. Hopefully that works.
I think that works. I think that's okay.
I think it might work. Full frontal, trading brutality. There you go. Cowboy's gonna flash that QR code on the screen. Join us because look, here's the thing. You want to make a difference in your life. You want to be in a better financial position than where you are right now. You want to improve your bottom line, whether it's to take that dream vacation, buy that supercar that you're thinking about, or just putting money away for a rainy day. AlgoFactory.tech is the only place where we not just teach you how to trade, but how to build the algorithms and how to do it. Only place. Join right now. Commit to us. Give us a solid 6 months, and you will see how drastic your life changes and how much of an impact that we make for you. With that being said, Cowboy, let's get into it.
6 months. I mean, look, if you were to come and join us, and you were to give it a shot, join us or die. If you really were to give us a shot and really like dig into the process, dig into the content, be with us on these shows. Of course, we rebroadcast the private lab. So if you can't make the live lab that we do every day, not this one that we do for like free to the public, which is from 8:30 a.m. to 9 EST, but then we continue in our private group, and that goes from 9 to 10 EST, right? So and that goes through market open and stuff like that. If you were just to, you can catch those on a rebroadcast. We save them, we put them up, and we save them for several months. But once you go through the classes, you're going to understand that there is a process to building your trading plan. And remember, you're not going to hard code right away. It doesn't take that long to build a trading plan. I mean, if you're really, really going through the material, you could probably knock one out. If you have no understanding of trading, it might take you a few months because you're really catching up, and that's fine. That's a great way to do it. We teach you the basics in the videos. You listen to the live labs. You join live if you can. If not, you catch them later. You talk with people over in the Telegram. Everybody's answering each other's questions. Well, shoot, I was in there last night at 2 a.m. I go to sleep around 1 or 2 a.m. and I'm back up in a couple hours to go back to work. We're always in there. Immerse yourself. Within a few months. Yeah, that 6-month mark is pretty good. You should have a basic idea of trading at that point, have built a manual algorithm, so not something that's, coded. It's not some fancy, turn on, walk away thing. But once you have that, and once you could actually make money with that if it is profitable, and it doesn't take a whole lot to turn that into something coded, something you can back test, something that is profitable as well. So, that 6-month mark for someone brand new is a pretty good mark. And then for somebody who already has experience trading, it could be much quicker than that. I'm not saying you'll be profitable in 6 months. I mean, there are some people who are profitable within, a shorter period of time than that easily. And there's some people who, maybe they work 10 hours a day and they can only devote an hour a day towards this. But that hour a day, if done with focus, can be very, valuable. This is really, like we always say, it's a marathon. It's not a sprint. But, after a few months, you should be able to say, this is clicking. We have brand new people to trading who feel like it's clicking after like a month. They might not be, ready to build their algorithm right then, but there's like, I understand this. I feel pretty good about this. And I know if I stick with it, it's going to play out. So these are the kind of reactions we're getting from people after only a month or two who have no experience trading. So that's, 6 months is almost a generous number. And today, what we're going to do on this live lab, this public live lab, is we're going to discuss FOMO, Okay. So FOMO is the fear of missing out. And there's a perfect example in probably all markets right now. I'm just kind of, as we're talking, I'm perusing the charts. We'll go into the Forex market because we had some news this morning that is causing a bit of a mini FOMO event. Okay. So let me go ahead and crack open the screen. Entire screen. Okay. Give me just a moment. Okay. Sorry, doing a couple things at once there. These market events, I tend to have to multitask, but let me open this screen up and make it visible for you so you can really see what I'm talking about when I say FOMO. Okay. Now, you'll notice that if you were to just start to get into trading, you might notice that most people have green and red candles, and mine are purple and kind of gray. And there is a difference right then and there, right? There's a difference. Hey, why is this candle's not green and red? Well, that's because I do that to filter out emotion, right? Trading is a game where you don't want emotion to mess with you, okay? And just a quick shout out, we got Valley Girl. Hey, what's up? Thank you for joining us over here on YouTube. You're also over in the private chat. We love it. It is summertime. It's a little bit slower, so we might not have as many people in the chat. But we do seem to be getting just as many people watching these videos after the fact. So if you are watching this, don't forget to hit that like button. If you're watching this on YouTube, help us out with the algos, and the same with TikTok if you're watching a clip. So we had the CPI print come out this morning, okay? And the CPI, I'm going to roll over to, first of all, I'm going to zoom this in. Give me just a moment so people can see it on the screen a little bit better, right? And then I'm going to roll over to the calendar. And right here, you'll see at the top that I just scrolled, right here, 6:30 a.m. CPI month over month, year over year. If you were watching yesterday and the day before, I mentioned this, especially on Monday. This is the inflation, consumer price inflation. Those are the numbers for that. And that comes out once a month, and right now it's the hottest topic, and you'll notice that these numbers are a little bit below expected. The month-over-month CPI is about 30% lower than expected. Of course, they only do it in these digits. It might not be exactly 30%, but it's lower, and that's what matters. The year-over-year CPI is lower than expected. It's about 0.1% lower. And the core CPI, which excludes, I think, food and fuel, food and energy, that's also lower significantly. And what does that tell us? Well, that tells us that the big game right now in trading is what are they going to do with the Fed interest rate? You hear it all the time. Chairman Powell is going to raise rates. Chairman Powell is going to, pause the rate. That's all we hear about. Well, the CPI is what they're looking at, whether or not they're going to raise rates or not, because the Fed has a dual mandate. And one of those is to keep inflation low. Now, if CPI is going down, well, that means that what they've been doing, which is hiking rates, is supposedly starting to work. So if inflation is going down, then the quote unquote wisdom is that they will not have to hike rates as much, or they may be able to stop doing it. Powell has said they're going to hike more this year. I think he said at least 2 more hikes. There's other people saying 4. There's some people saying none. No one knows what the future holds. But this is an indication that we won't see as many rate hikes, okay? So what does that do to the market? Well, this is when we actually start to have a discussion about FOMO, okay? So I'm going to type this in. FOMO is an emotional, it's an emotional reaction to markets. It's fear of missing out, okay? And the thing about FOMO is that it gets people to make decisions that don't have anything to do with with market wisdom, okay? So what do I mean by that? Well, look, we're technical traders in here, right? What we do is we take a look at the charts. We understand that events, news events, other fundamentals affect the charts. We understand that. But what I do, at least as a technical trader, is I wait for the effects of that event to play out before I decide to try to trade. Now that might take a few minutes, it might take a few hours, but this big fat candle upwards, this bullish candle that you see right here, this is a lot of money that was on the sidelines, and a lot of people thinking, okay, well, now we know that the CPI is lower. Now they might not hike the rates as much. We want to buy the euro and sell the dollar, right? Because if they're going to hike the interest rate, the dollar is going to get stronger. People want to buy the dollar. Well, in this case, with the EUR/USD, buying that means you're selling the dollar, right? Because the USD is the second half of the EUR. So effectively, people are selling the dollar here or buying the other side of it, which is the euro, and you have this big candle up. Well, what happens is people see this big candle and they're like, oh my gosh, price just went up, whatever percent. And when you're trading Forex, it's fractions of a penny, you're using leverage. So this is actually a pretty decent sized move to all happen within 30 minutes. That's a nice big candle. Look at all the candles before it. When's the last time you saw a candle of this size? Maybe back here on July 7th, and still not this big. This is a half-hour candle. I can just kind of really briefly roll back, and I don't think I can find a candle this size. Now, this candle hasn't completed yet. There's more time for that, but I bet you I'd have to go back to like another related event, maybe like the FOMC, where they actually talk about the rate. But this is clearly an emotional candle, if you will, or if I want to call it a technical candle, say it's a news event. And those tend to not go forever. In fact, if you go back in time, you look at big candles. Here's a good example of a big candle right here, this big gray candle, which is a bearish candle. And price, after this all washed out, and this was a news event, and after it washed out, it headed right back up. The same thing is here. You had a news event, price headed up. Maybe it was, I don't know, non-farm payrolls or something, and then price went ahead and headed back down. Here's one right here. The candle didn't close high, but it did shriek up really high, and it got crushed right back down and resumed its regular direction. Here you have a series of those candles, and then price resumed back down. So, here's a really good example. You have price really, really pushed down and then resumed back up and eventually made its way back right to where it started. So these candles, as large and exciting as they are, they tend to get crushed back in the other direction immediately. And the mistake that people make is they see this big high momentum candle, especially if the candle closes and the candle, that purple part of the candle body, that closing up high, that's a high momentum candle. That means that price, if this closed and it looks like it does right now, right? That means that, and if you go into our classes over at algofactory.tech, that's www.algofactory.tech. I just put the URL on the screen there. We have a class that teaches you the anatomy of a candlestick and what this means. But long story short, you would know that this, if it closed in the next 11 minutes and it looks just like this, that's a high momentum candle, and there's a very, very good chance that price is going to head right back down to where it began. Okay, so a lot of people, though, they catch FOMO and they are afraid they're going to miss out on a big price move, right? And so they're going to buy this. So they're going to go long, right? They're going to enter maybe like right here, and the green is profit and the blue is loss. They're going to enter right there, and then what'll happen is price may or may not go in their direction for a short time, most likely, we don't know, but they're oh, this is a big move, oh, I need to get in, they get really excited, and then price just goes against them and they stop out. Very, very common. It's FOMO. It happens all the time, and this is something that, as a trader, FOMO is a big, big enemy. And there is there's its cousin too, or its brother, I should say. It's when you panic because of a move, right? So in Forex, up is down, down is up. All we care about, is volatility. So in the case that the candle moved in the opposite direction, it's still FOMO. People are they're FOMOing into shorts, right? So if this was like Bitcoin or something, I could roll over to Bitcoin and we can take a look at what that looks like from a, like from a spot perspective. So we're talking about buying Bitcoin and holding it rather than trading the Forex market. And I could show you Bitcoin is all kinds of FOMO. Bitcoin is made of FOMO. And if you go on a higher time frame, you'll see it. And you can see it on a low time frame all the time, but a high time frame is, historically, where you really see the effect of FOMO. And a good example of FOMO is right here, where in June of 2020 we had the big move up, and you see these candles get bigger and bigger and bigger, and then at the top of this move, you got all kinds of people that saw, oh man, these people, it went from 10,000 to 25,000. Oh man, I'm going to buy, and they make some money. And then it's like, it went from 20 to 40. Oh man, I'm going to buy. And then it's up to like 50. It went from 10,000 to 50,000. Like maybe it'll go to 150,000. And they buy way up here, right? And they buy like, let me see here. Like the very top. Because there's a lot of people right here at the top where they bought and price just went against them, right? That happens. And they're the ones who got caught in the FOMO. Now, people had down here gotten caught in FOMO and they got paid off. And that actually ends up causing more FOMO, makes it worse. And then you have the, and God bless them, you have the Michael Saylors of the world who, they're just going to, Bitcoin's everything and Bitcoin's the future. And he might be right, he might not be, but they buy emotionally. They're not paying attention to the technicals. And I can tell you right now, having been through a couple of these boom bust cycles of Bitcoin, right here, right about here, where that arrow is where I told my friends I'm getting out. Okay. That I think the price was, it headed back up. It even broke the prior high. A lot of people got super excited right here. You're like, oh man, it's going to go even higher. It's at 69,000. It's going to go to 99,000. Like, okay, maybe, but I'm certainly not going to buy up here. And as price calmed down and the technicals on the chart let me know, like, okay, all right, it's time to exit. But there's a lot of people who FOMO'd after this, believe it or not. They FOMO'd after this because they thought they saw price. Well, not what they thought. They actually saw price go up, down, and then up a little bit higher, and then down again. So like, oh, well, then it's going to go up even higher, right? And they all bought, like right here, that's what this purple candle is right here. There are people who FOMO'd back here, right? And they even FOMO'd as these candles headed up, and in reality, they just became bag holders. They bought at 50,000, 40,000, and now they're kind of sitting there eating the dookie sandwich, for the last, 15 months, 18 months. So FOMO is something that we are conditioned as humans to react with greed and fear in markets. That's just how it is. And FOMO is greed. And so what we do at Algo Factory as technical traders is we distill the fear and the greed. Now, there's no way to get rid of fear and greed. That's not how this works. But if you go to the Algo Factory website, then what'll happen is, let me bust that out here. Let's go to www.algofactory.tech. And we have these courses. And I'll zoom in a bit here. So if you go to the top of our website, there's a spot where you can click on the courses and it'll take you down to this area, and you'll see that we have 4 courses. We have the Essentials course. We have the Algorithmic Structure course. The Essentials is basically for like beginner traders. Algorithmic Structure is how we build algorithms. We have the Operations course where you're going to treat your trading as a business. And then you have the Ethos course, which is actually trading psychology. Okay. And the FOMO and everything to do with FOMO falls under this rubric, trading psychology. It's all about the different biases. It's all about the mistakes that people make in trading. And so it's we put that together so people can actually go through this, do their own research, and make their decisions when they're trading based on technicals, based on history, based on science. Believe the science, and instead of using their emotions. So that's what we do. So head on over. The QR code is still on the screen. I'll go ahead and pop up the URL real quick. And we're going to have the gorilla give us the gorilla send-off.
All right, you savages. Listen, don't be wasting time watching on the sidelines. Join AlgoFactory.tech. Make that positive impact to your bottom line, to your financial future. Look, you learn from us. You could work from anywhere in the world, in any market, no matter if the market is going through a boom, a bust, if it's going up and skyrocketing and doing a moonshot, or if it's in the middle of a crash. you are going to profit. You're going to learn how to do that right here on algofactory.tech. Join us today. QR code is on the screen. Link is in the description box. Don't think about it. Do it. Commit. Give me 6 months of your life and watch what we do to you. And with that being said, Cowboy, let's go into the live lab. Maybe that was a little too threatening. Give me 6 months of your life.
Yeah.
Watch what I do to you.
Watch what we do to you. Well, I
I'm
don't know.
gonna have to be like a military drill sergeant, Cowboy. That's what we got to do.
Oh no.